morning, everybody. Welcome back to the Everyday Growth Advisors live stream. I hope you're having a good morning, and it is a Wednesday. Happy hump day, guys. We are officially in a downtrend. Really nice setup here in the SPX. I hope that you all attended the live stream on Monday. If you did and you're part of the Discord community, you probably would have followed along with the plays that we have been playing. and they have been pretty on point so far. So now where we are right now is kind of a very interesting place. I'll go through this in a second with the targets on the S&P 500, where we are, where we could hit to, and yada yada. But let's talk about the news first and see if there's anything on there that we need to be aware about. Nasdaq just kind of trading lower this morning, but it could be a higher low. We don't know yet. Netflix reported earnings yesterday, down 8% after bad guidance. So as I was mentioning on Monday's webinar, it is not enough for companies to just beat. It is important for them to issue good guidance. This is the key thing that the market's going to be disgruntled about this entire quarter, because if we're expecting this economy to open up back again and for everything to go back to normal, then we absolutely must see good guidance, because we want to be sure that companies are expecting better than usual business, right? How else would we know that the economy is starting to recover? Okay, so that's something that just to keep in the back of your head. Obviously, things are not going to go as planned, and the market in the short term is not going to reward companies that are performing ill. The market's like a voting machine in the short run, right? Like the famous Benjamin Graham says, but in the long run, it's a weighing machine, and only the best will survive. That's the reason why I am invested in only the best balance sheets, right? And I've been saying this time and time again, this is the time when you should be buckling down and purchasing only the best conviction names, right? Companies with great growth prospects in terms of strong balance sheets. Not time to be speculating or punting here, guys. This is not the time, okay? We're at very, very interesting territory right now. We could definitely go higher, but we need a little bit of a correction, which we just got, and we'll see where things go from here. All right. JP Morgan warns of Bitcoin weakness as futures get liquidated. Okay. Stumble in stocks, like easy, da da da. Okay. China considers supporting, da da da. All right. Indonesian military, and then for dead. China urges UN. Okay. Chinese diplomat. All right. Nothing much here. How Robinhood made trading easy, maybe even too hard. Okay. Cool. Let's have a look at the Wall Street Journal here. See what we have over here. Stock futures waver amid concerns around COVID-19 infection rate. That's another thing that's weighing on investors' minds this week. Cases are spiking. I don't know if you guys heard. I'm not sure if there's any ravers in this trading community, but EDC got postponed, and a lot of people were not happy about that. But then again, I think they were kind of dumb for trying to hold it this year in May. I didn't think it was going to happen to begin with. I think, and then now they're postponing it to October, and I think that's another dumb move. I don't think we're going to recover by October neither. Just to give you guys perspective, okay? Just to give you guys a little bit of perspective. Singapore, which is where I am right now, we're in phase 3 of reopening, all right? Everything shuts down at 10:30, and everybody has to wear masks wherever we go, and things are still pretty strict here, okay? We're in phase 3, all right? The fact of the matter is, until countries don't learn to curb the movement and the spread of this thing, there is no way that we will get back to normal life. There is no way. Countries that will keep on delaying and will keep on trying their luck and reopening are gonna fail, because they haven't achieved the herd immunity yet, right? And the vaccines are taking a little longer than expected to roll out. So we're starting to see bad news cycle in now, which is what I was mentioning on Monday's live stream, Monday's webinar. I have been talking about this for a week now, telling you guys that this is what we're expecting, right? And right on time, a day before I mentioned it, we took some hedges. Yesterday paid out, and today obviously the market's looking a little worse. My equity portfolio is obviously getting hit big time. But you know what? Doesn't matter in the short run. All of this doesn't matter. All the negative here doesn't matter at all. It's just a long run that matters. What is it going to be at the end of the year? What is the P&L going to be at the end of the year? That's what's important to me, right? And as long as I continue buying the higher conviction names, I'll be okay, right? Also, yesterday Apple had an event which was slightly underwhelming, but then it was an Apple event. I mean, you don't expect Apple to pull a magic rabbit out of its hat, not since Steve Jobs was gone, right? There's no more of that, and there's just one more thing, you remember, which he used to do. And you know, it's just you can't expect a company like Apple, after being 20 years in the innovation game, to continue putting out cutting edge technology. I gotta say though, the new iMac looks pretty sick. Just to go have a look at it, right? I don't know if you guys saw this, but the new iMac looks pretty sick. This one's right here. They come in different colors, and they're pretty. Looks like pretty small. I don't know about the iPad Pro. I mean, okay, they obviously made it look a lot like they made it look enticing. And I might just have to cop the iPhone 12 purple because that's EGA's colors right there. You know what I'm saying? I might just have to cop the purple, man. I'm still using like a iPhone XR, and I have no intention to switch because I like my XR and I like the screen size. It's like the perfect size phone. If I switch to the iPhone 12, I'll switch after a new phone comes out, so that the iPhone 12 becomes cheaper. But yeah, I think the super cycle is still in play though, and I think Apple will continue to rake in cash. They have a very strong balance sheet. It's one of the better companies, but they are slightly overvalued at this point, right? Okay, so infection rates. We have Archego's saga still continuing. How lithium became a hot commodity. Well, I guess this is news for some, but I mean, we foresaw this, right? Private equity firms regain taste for giant buyouts, leverage buyouts. That's okay. That's cool. Interesting. Let's see the pre-market movers here. Netflix down quite a bit of red. But remember, this could turn around very quickly. We could be heading for a possible retracement, further retracement, or we could be heading for an extension and then a pullback. Okay, so keep that in mind. Let's look at the top 500 caps here for insider selling. Once again, let's see the past few days. 19th, there we go. Coinbase director sold some of his stuff, about $43 million worth. That's nice. He still has 2.2 million shares. Moderna sold. Okay. Snapchat chief business officer is cashing in some of his chips. Salesforce chief accounting officer sold some of hers. Allenson Joe. And then VMware and HCA. Okay, not that many insiders here that we need to worry about. We'll get to Beyond Valuation in a second. We're just reading the 10K earlier. And, okay, right before this market starts, and right before I get into this technical analysis here, I wanna take a second to talk to you guys about something. And, call this like a pep talk, or call this like a whatever you will, to get you through the trading day today. And I maybe want to make this like a little thing that we do every live stream, so that we have a little bit of direction, right? Before you start trading, try to take a couple of deep breaths. And I realize ever since options have become a fad, which has risen to popularity within the past, I want to say 2 years or so, people have really started to become impatient, okay? And I've realized, nowadays, 100% return is even not enough for people, okay? 100% return has become so over-sensationalized that people don't even want 100% return. People are like all about the 1,000% tendies now. And I want to say something, because I come from a generation where, and I'm not saying that my generation's old. I'm a millennial. And, from a millennial's perspective, we're trapped in between the newer generation and the older generation. And we see things from both sides. The newer generation wants money quick. But then, as a millennial who's trapped in between, I see, from my perspective, the way that returns were prior to this, people were not expecting, like 20 to 30% per year was like a huge deal, okay? And let me tell you something. Here's the reality. This is going to continue to hold true. If you can continually beat the S&P 500 every year for a long period of time, I'm saying more than 10 years, then you have bragging rights. if you seriously just only beat the S&P 500 for 1 year, and then you suddenly say, oh, I'm like in the elite league now, I think you might be a bit delusional, because fund managers themselves can make huge sums of money 1 year and then lose it all the next year. Okay, and active management, all of us know that active management usually leads to a lot of anguish and pain. Passive investments usually end up with lots less anguish and more gains. Okay, this is not to say that active management doesn't have its place. All I'm saying is, if you are planning to actively manage your money, stop expecting and stop putting expectations to your gains. This is seriously corroding your mindset and affecting your trading style. Okay? When you get into a trading day, the first thing that you should do is take a deep breath and tell yourself that today, I'm not expecting 100%, I'm not expecting 50%, I'm not expecting 70%, I am just expecting whatever that comes my way, and I will even take 20 to 30%. Have this mindset and compound your wealth in a slow manner. You will see the results will start to really improve dramatically. Okay? The problem is people are so sensationalized, aiming for 100, 200% returns daily, that it's created an unrealistic expectation when they enter the markets. Okay? And when you think about that for a second, it's seriously delusional, because asset classes are not meant to give you 100% returns within a day. And you can see the amount of hype that goes on social media right now, with people posting gains on cryptocurrencies and this and that. And I'm just gonna say, be careful, guys. Just be careful. Count me as somebody who's just trying to caution you on what I see, and I'm just highlighting it for you. There's no ill feelings towards any group of people here. I'm just telling you from my perspective, the way that I see it. I see a lot of over sensationalization, and you really gotta watch your back. You gotta check your ego, and you gotta remain humble, and you gotta expect less by doing more. That's how you stay ahead. And that's all I wanted to send a message to you guys. That's the message of the day today, guys. All right. Okay, and now so back to the S&P 500 technical update here. So we hit our first target here, right? The 4120, right? We hit it sometime, I think, yesterday. Okay. And here we can see some more consolidation candles occurring. Now there's it's interesting here. We could do one of two things, but I'm inclined to say that we're gonna probably make another wave down. Since we have a consolidation here, this was kind of a bear flag, right? You can see it's kind of a bear flag, okay? And we can see we're starting to break below the bear flag right now, but we'll see if we actually do. This 15-minute candle still has to close below it, and then we get the bearish signal right here. We need to see a break below the 4120 level, and then a hold below the 4120 level for a test of the 4090 level. Okay, that is how you're gonna play this today. If we stay below 4120 and we consolidate below this level, okay, we consolidate below this level, then we have the chance of opening up 4090, and that could happen today, it could happen tomorrow, it could happen whenever. There's no way to predict when it happens, but then you'll see that wave down again. Okay, if we stay above this level, then we are opening the grounds up for a upside extension, a possible retest of the 200 EMA, and that will be the next level of resistance here at 4145, 4140, this level right here. Okay, so we have very interesting situations today. These are your pivot points for the day. Okay, if bulls are able to recapture 4150 and stay above it today, then we're going back to the upside. Okay, if bulls are able to capture 4120 and stay, if bears are able to capture 4120 and stay below 4120 today, then we open up more downside. Okay, simple way to think about it. All right, so that's all you need to know for the technical update here on SPY. Okay, on the Nasdaq, things look a little more ugly. All right, things look a little more ugly with the Nasdaq. So let me show you. So with the Nasdaq here, if we look at the 4-hour on this one, certainly feels a lot more bearish than SPY. Okay, and if we look at this over here, we can see a retest here again. But this is not a very nice bear flag. You can see it's not the same as SPY. In fact, the futures here look a little rocky here. And I think there is a high possibility that we extend to the downside. And I want to point out something here. There's a real opportunity here with Apple short position, but I don't know if it's going to work out. I'm just going to put it out there and see you know, what you guys think about it. We had a big period of consolidation. This was, remember, this was your look at this complete market cycle here, right? A period of accumulation, right? Markup phase. We have the distribution phase, and now we are about to engage in a markdown phase. Okay, so this is the point where insiders have been kind of unloading, but then I also have been seeing lots of bullish, unusual flow. So it's been a very conflicting signal with Apple here. People were kind of waiting for the Apple event, and I think that now that the Apple event is out, you know, they feel a little more beholden to sell this and create selling pressure. Now, one thing. So after the consolidation here, you can see clearly there was a channel, right? Clearly a channel here. Let me show you real quick. This was the channel right here, right? The white channel. You had these waves, right? And then a breakout, right? You had the breakout right here. The breakout from the channel occurred here, but then we got a quick pullback to retest a dual zone here, and then a quick sell-off again. So we had a wave down, right? A wave down, and then another wave down. So you have two waves already, okay? This is your two-wave confirmation on the 15-minute chart. And if Apple can get below 131 or so, right? 131.50, I would say. Yeah, 131.50 is the level. If we can get down below 131.50, then this opens up the downside for Apple all the way down to the 120 somethings level. There's also a breakaway gap at the 128 to 128.50. Okay, and that gap might possibly be filled up. Okay, so there is a possibility of that happening. Morning bullies. What? Bullies? Hey, we ain't bullying. Morning T. What's up, Ryan? How you doing? What's up, Mark? How you doing? Aaron, hi. You're late? Nah, you'll be okay. Don't worry. Get these likes up. Yes, please. If you can take a second out of your day and smash the like button, I would seriously appreciate it. You know, it means a lot to me if you do, and that would be truly, truly appreciated. Okay, so Apple real short scenario here with a good cadence with the indexes. I can see the volume and the momentum also possibly edging this one down further. So Apple puts here look like a great scenario to play today if we can get the move below 131.50. That's your pivot point for Apple. We need the move below and the consolidation below this level to take this to the downside at the 120 somethings. I would definitely take an option that's a month out for it to achieve this. We don't know how or when, and I would go considerably out the money too. Okay, I would go something like 128 or 127, somewhere there, for a month out and see how that pays out, because I'm pretty sure those are going to be somewhat expensive. All right, the 128, 127 puts make sense. Another way that you want to play that, which is a smart way to do it in my opinion and risk less, is to do a bear spread, right? A bear spread. You could do a debit bear spread, or you could even do a credit bear spread. Okay, you could sell options here, or you could buy the in the money and use the out the money to fund the in the money option and get that cheaper. Okay, great. Okay, so that's one of them, and then Facebook has a similar setup here, just so you guys know. I'm just gonna point it out again. Same a similar setup. Facebook's one is a little more clearer though. If we look at it. So risk to reward ratio with Facebook's really nice here. 290 is the target. Entry would be somewhere around 300. Stop loss could be around 306 or so. So we're looking at about a 1:2 risk to reward ratio here to the downside. That would be nice if we can get Facebook to do that. Supply zones right here on the bottom. You can see that at the 290s, which is perfectly lined up with our target if this were to happen, okay? Do remember though, we have earnings for Facebook on 28 April, so that's in a week from now, okay? So keep your eyes open and wait and see what happens. In order to make this happen, we would have to see a rejection of the 50 EMA and then an entry at 301.40 or so to play this to the downside here. That's another opportunity that I am seeing, okay? Netflix obviously got sold off, almost down $47 from yesterday. It's beautiful. And yes, gold. Gold is the other one I'm talking about. I wanted to talk to you guys about. Remember how I spoke about gold maybe a couple live streams ago. Now watch gold here. Very, very important point right here, right? If it breaks out of this 168.81 level, I'm going to set an alert here so that I know. If it breaks out of this level here, you know, it's going to be a key level for gold. In fact, I'm going to set another alert right here to know if it's starting to break out. And, you know, if it breaks out of this long down channel, it might start to make a move up to the 180s. And so gold might be a good play here if the market continues to melt down, okay? The VIX is also looking slightly dangerous here. Gapped up, has been continuing to move up, has been consolidating. You never know what happens with the VIX, right? It could go crazy, okay? So keep your eyes on that as well. All right. Okay. Great. And nothing else that I wanted to go through. Yeah, those are the two solid trading ideas that I have for today. Pretty high success rate ones, and I don't mind sharing it with you guys. Okay, great. Okay, so we have BYND as the ticker of the week this week, and you know, I've been talking about this one for a while. It broke out of this you know, downward pattern that it was in. It's been consolidating really nicely, and today I did the intrinsic valuation of this business. Turns out that BYND is actually overvalued by, well, okay, it's arguable. It's fairly valued or slightly overvalued. Okay, so here's the deets. Or rather, how I went about doing this valuation. So BYND is considered a growth business, okay? Revenues are growing at a pretty nice rate. They don't have much depth in terms of equity, but they do have depth in terms of, you know, the fact that they have a longer term debt, okay? And that's debt that they would have raised through notes and through loans, whichever way that they have to, okay? And this company is still negative free cash flow, which means it's still in an operating loss. Operating margins are still pretty slim, but I would say, and when I'm talking about operating margins, I mean that, you know, the nature of the business doesn't, I think they're going to see a lot of competition from Impossible in the future, and this might cause a lot of tussle between them to, you know, vie for the top spot, okay? In terms of balance sheet, companies looking, you know, it has like $159 million cash on hand. Receivables are all right. Inventory is higher than usual because of the COVID crisis. They're holding lots of inventory that they need to get rid of, right? And then, as I was mentioning in the previous live stream on Monday, property, plant, equipment is, you know, almost twice up, which is the, I was mentioning to you guys, they're expanding their presence all around the world. And they are building a facility in Shanghai. So this got recorded in the books now as of the end of 2020. Okay, and China's a really big market for them. So let's see how they do. In terms of revenue growth, I want to say it's not extremely impressive. But you know what? For a growth business, I would have expected more revenue growth. But you know what? I understand they're in like a niche segment. And it's a tough segment to grow out of. So let's give them the benefit of the doubt that they will take some time to grow out of this revenue slumber that they're having. They grew pretty quickly with 100% on the first year, obviously. And then the second year, they were up like almost, I want to say close to 3 times. And then the year after that, 3 times too. But then 2020, when the pandemic hit, they got slapped with, you know, slower growth rates, which is acceptable, right? It's understandable as an investor, right? But obviously investors are going to be spooked and they're going to run away, right? So I truly do think that it, you know, based on its cash flows. And so, by the way, I decided to take a discounted cash flow based on revenues for this one. I couldn't go with the cash from the operational cash flow for this one, which is also called EBITDA, because we want to forecast this based on revenues as it's a growth business, and the P ratios are kind of whack on this one. So my forecast here was pretty simple for my inputs. I was looking at a 60% revenue growth in 2021 based on pent-up demand numbers and then excess inventory that they have. And I see the inventory taking about a year to clear, so the next year with the 50% growth, and then 2 years of 40% growth, which is very conservative, followed by 3 years of 30% growth, and then a taper off of 20% in the remaining last 3 years of the 10-year cycle. Okay, for a growth stock and a secular trend that's just growing, I think these are fair assumptions to make. Very conservative assumptions, may I add. Okay, and I could easily increase these rates, and that would make this fair value higher than where it is. But I always like to go conservative, and that way I know that this company is worth at least this amount, right? It's worth at least this amount. And so then I always have a margin of safety, which is usually about 5% to the upside and 5% to the downside. So do what you will in terms of assuming what the fair value is. You could add 5% on, deduct 5% from this to get your true value of intrinsic valuation, right? Now the other thing that I took into account was CapEx, right? Capital expenditures on R&D, capital expenditures on plant, property, equipment. And I think that for the next foreseeable few years, we're going to see increased CapEx from beyond, right? They need to expand. They're a growth business. They can't keep CapEx the same, or they can't, average it. So I think for the next 2 years, we're going to see higher than usual CapEx at about 22%. And then the next, few years after that, they may choose to taper off. I put a steady 10-year CapEx for the next 4 years, and then a 5-year taper off after that, assuming that they will be in a growth phase, which is more matured as a business. And, they might end up with a more stable environment to operate their business activity. Working capital remains the same, 32%. This is a completely fine assumption. And then depreciation and amortization at, I'm going to put it slightly lower than the average because I think this is going to be, foreseeable to be lower in the near future. And then the tax rate, I've assumed to be 30%. Right now, I don't believe that the company is making any money. Let's actually go and have a look. Pretty sure that they're not. And yeah, they're not, right? So they're in an operating loss, right? So net income's negative. You can see it's been in negative, negative, negative. In fact, 2020 was the worst year for them so far in terms of net income, right? But we don't necessarily look at net income as the way to judge whether a business is good. That is one of the biggest myths that you need to overlook, or people mostly overlook, okay? Remember that net income doesn't always mean that the company is doing bad. If a net income is negative, it doesn't mean that, okay? A company could have net income but have good growth prospects, and investors will reward that, and the stock price will go up, okay? So remember that. Those are important things that you need to keep track of. Okay, so actually, we don't need this to be 30%. We'll put it as 15, okay? And that, I'm going to amend that. I didn't actually realize that they are not making profit. And if they're not making profit, they're operating in a loss. That means they don't pay taxes, which means that their selected tax rate is going to be much lower at the 16-15%. So for UV, if a company is in an operating loss, our standard tax rate assumption is 15%. Okay, and the discount rate here, we have adjusted it to about low end, mid end, and a high end of 7, 8, 9%. We could go a little higher here and make this 7.5, 8.5, and 9.5 as a fair assumption here. Increasing this discount rates a little bit because they're going to be spending more to gain more revenue, right? And they have competitors within the same market, Impossible Meat and right? So that gives us a revenue exit multiple of about 2.1 on the low end and then 2.3 on the high end. The terminal value comes to 15 billion, 16 billion on the high end. And then you have a fair value mixed bag that ranges between 138 on the low side and then 125 on the high side. So the market price assumption here is going to be about fair value of 132, 132.03. So let me go and amend that actually. 132.03. There we go. And so this is going to be 32.03. Perfect. All right, cool. So that's your valuation of Beyond Meat here. Okay. Now I know I went through it pretty quickly, but remember that the valuation that I'm doing is a Spark valuation. Okay. Remember all the valuations that I do is a Spark valuation, and you would have to pour through the the consolidated statement of cash flows and all of that as well to forecast all of those other things as well in order to get a complete accurate assessment of the business. If you were to ask me, I would say the business is at fair value or slightly above fair value. Okay, so buying shares right now, you would be paying pretty much you would be paying exactly the price for the business, and I'm saying that based on future growth. Okay, so you're saying you're gonna pay this price for Beyond's future growth. Okay, so take that into account. If you want to pay for Beyond's future growth now, then accept this price and pay for it. If you want to wait for a discounted opportunity, then wait for Beyond to drop and come back down to the 115s, and then that will give you another buying opportunity to buy this at a discount. Okay? Great. Okay. Cool. Other things that we should take note of: current ratio is looking good. Long-term assets over liabilities are pretty healthy. Quick ratio also good. Interest coverage is a little bit of a worry here. It's negative 19. That means they're using, some kind of a revolving letter of credit to fund their debt. Okay, and they're not really able to pay it back very, effortlessly. You can see revenue numbers look very rosy, but revenue numbers are just part of the game, right? They're just part of the game. So keep that in mind. And yeah, I don't have much else. Actually, let's. I was reading through this, but I haven't finished reading this. I'll spend about 2 minutes more to see if there are any legal proceedings against them. Okay, so they do have legal proceedings. On May this, file a complaint, breach of contract, trade secrets, unfair competition. So they farm a counterclaim. Okay. Interesting. On January 24th, the writ judge granted a right to attach an amount this on the grounds that Donnelly Farms had established a probable validity of its claim. Oh shit! For a small batch of unpaid invoices. So this is the kind of shit that you have to sometimes pour through, guys. Okay, it's really important for you to look for these little things. They could set off some nonsense, and then the stock drops. Okay, and then okay, shareholder. Interesting. One of their own insiders filed a lawsuit against them. Okay, we'll read all this. Risk factors. Okay, cool. All right. Well, doesn't seem like a very big problem, and it's only a $600,000 liability there. So from an investor standpoint, that's like cents on the earnings per share that will get diluted away very easily. Not a very big issue. Apart from that, yeah, I don't have anything else for you guys. Oh, also, guys, just wanted to put out a quick reminder that our technical analysis course is live for sign up. If you were interested in joining us for the 6-day course, which is now I've decided to extend it by 1 day, you can go over to the pinned message in the chat and click on our website to sign up. This is a 6-day course now. You can enroll today. It's wave number 19th. The class schedule is 5/3 to 5/8, May 3rd to May 8th, every day 9 p.m. Eastern time. And if you want to look at the curriculum, everything's down here. We'll be going through market structures, candlestick patterns, buyers and sellers, psychology of day trading, top-down analysis, risk and reward management, trends, channels, wave patterns, level 2 data, trend validation, reading tapes, reversal patterns, everything. This is a very, very jam-packed curriculum. This is the most jam-packed curriculum that I've put together for value, and I think it is our most comprehensive course yet. Okay, so I just wanted to put that out there in case you were interested. And if you have questions, there are some frequently asked questions here as well that you can read that you'll get some answers for. Alrighty, well, thank you guys for attending the live stream. I hope that you have a great trading day. Stay green, guys. Don't let your mind and your mentality play tricks on you. Remember what I said earlier. Stay nimble, stay vigilant. Don't expect high returns. It's not very, very efficient in terms of setting up a good mindset. And I sincerely hope that all of you guys make tons of money. Okay. I will be jumping on the Discord right now, and remember the pivot points on SPX that I spoke about. And if you can, well, once again, on your way out, smash the like button. That would be truly appreciated. And I will see you guys on Friday. Take care and have a great day, guys. Bye bye. Love you all.